What if I told you that there's one stock that 99% of investors are overlooking that's quietly set to skyrocket before the end of this month? You don't want to miss out on this because it's all fucking bullshit. It always is. Whenever I see YouTubers or people on CNBC saying this kind of stuff, I just cringe. If you're claiming to be able to pick the next breakout stock in the short run, you're either a huge liar or a fucking moron, but probably both. Now, if you're serious about changing your life through successful investing, there are some things that you need to know that will put you light years ahead where most fail, but I'll get into that. Now, currently, guys, there are 3 stocks that everyone's focused on: Nvidia, Palantir, and Tesla. And guys, they are selling for what appears to be massive valuations. Now, first off, I want to start by saying from the outside, it looks like these are 3 incredible businesses. But our 4th pillar in our principle-driven investing is that a great story can become a bad investment if you pay the wrong price. That's very, very important to understand because everybody gets so attached to these stories. But if you pay the wrong price, which is basically valuation, you can have a bad investment. Guys, Nvidia's right here. In the last 5 years, it's up 1,900%. That's what's garnering attention. It's $3.3 trillion. Guys, look at this free cash flow growth. In the last 5 years, their free cash flow, which is their cash from operations, subtracting out their capital expenditures, is $18 billion. But last year, it was $56.5 billion. So it just goes to show how much their free cash flow has grown. Look at their net income. Average in the last 5 years of $20 billion. Last year, $63 billion. And you know what else? Very little debt in this company. Actually, practically none. The difference between the market cap and the enterprise value is essentially their debt. And look at this. They're basically the same number, which means this company basically has no debt. Isn't that awesome? Of course it's awesome. Same with Palantir. They both have similar metrics in that regard. Massive growth in the last year of free cash flow. Palantir is absolutely crushing it free cash flow wise. And then we talk about a company like Tesla. And Tesla's kind of interesting because everyone is telling me, hey, Paul, Tesla's more than a car company. They're a tech company. Well, you know what's interesting? BYD just announced this very morning that they're going to be offering their self-driving software at no extra charge. So I want to ask people out there, again, this is a story and it could be material, it could not be material, but BYD has done very, very good things in the auto industry. And you look at a company like Tesla and the whole justification for their valuations, where they're a software business, even though over 90% of the revenue came from car sales. Okay, you look at this, their gross profit is 18%. The average software business is 65 to 80% gross margin. Go look at a company like Palantir. Their gross margin's over 80%. Now look at the saying, walks like a duck, talks like a duck, looks like a duck, must be a duck. This is a car company to me. But you look at this, price to sales ratio. What's that? Well, what it does, it takes the price of the company, which is the market cap, and divides it by the sales. You're at 12.4 here, which is a software business kind of multiple. The average car company is 0.5 to 1. 0.5 to 1. This is at 12.4. This is between 12 and 24 times the valuation for a car company. Now, why are these garnering attention? Well, look at the stock prices. Now, Tesla has absolutely fallen from its recent highs. It hit 488 back in December 18th. Guys, that was 2 months ago. It's already down to 343. And what's even crazier is they had 414 back here. And from 414 until about 101 here, the business had doubled in revenue and profit. And yet the stock was down 75%. Guys, this is the problem with buying stocks based on momentum and hype. You're not investing, you're speculating. And guess what? Short-term results do not matter in the long run. And let me show you guys some examples. Guys, this is Tattooed Chef. If those of you have been around for the channel for a long time, we got in a little YouTube battle with Jeremy from Financial Education about Tattooed Chef. Because back here, he said, guys, you got to fall in love with the story first before you look at the numbers. We looked at the numbers and said, this company is garbage. Well, this is what it's selling for right now. This is 0.00. There is no error on the screen. It is delisted. But guess what? August of 2020, Tattooed Chef went up 69%. In June of 2020, it went up 38%. In December of 2020, it went up 50%. all in that 1 month. Why? Because in the short run, stocks are a voting machine. In the long run, they're a weighing machine. But all of those dates were on its way back down to zero, to bankruptcy and delisting. Another company, Nikola. Nikola is the same exact story. In fact, the CEO is currently, I believe, serving jail time. He might have just been sentenced, but he's definitely in a lot of trouble. Nikola hit an all-time high, $2,800 in split-adjusted price. It is currently at 43 cents per share. Guys, 43 cents per share. And you know what? Go look at the videos in the past when we talked about Nikola. People were saying, you're so stupid. And guys, guess what? In May of 2020, we would have looked stupid because Nikola was up 110%. In June of 2020, we would have looked stupid again, up 123%. In November of 2020, even dumber, another 100% return. Now remember, Nikola at one point was faking their results by having a truck roll down the hill to make the truck appear like it worked. Now, you might sit there and say, well, Paul, it's easy to go back and pick. You're right. It's selection bias. But the point is, even with that selection bias, it still shows that during short periods of time, the stocks can run up very, very quickly. Now, let's go look at a couple companies that are still around and successful in how they've done. Let's pull up Lucid. And by the way, Lucid, I believe, is a beautiful car. Every time I see a Lucid, I just go, that is a beautiful freaking car. But look at this. The stock's at $2.74, all-time high in February 18 of 2021 of $65 per share. And this company still loses money hand over fist. But guess what? In February of 2021, it had a 166% return. In October of 2021, it had a 72% return. In November of 2021, it had a 59% return. So guys, that's a car company that's still around. Their sales are increasing, but look at this price difference. It's still down 90+% from its all-time high, 95% actually. Now, another car company that I think makes a pretty nice looking car, Rivian. Now, the reason car companies are easy to bring up is the electric vehicles were the old AI. Electric vehicles are changing the world, Paul. You don't get it. These things are awesome, blah, 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 blah. I haven't brought up Workhorse at all yet. But all the electric vehicles were the previous hype before AI. And look at how they did. Even the ones that are still around with massively more sales are still struggling. Look at Rivian, currently at $12.84, all-time high in November of 21 of $180 per share. And guess what? In November of 2021, 87% return. March of 22, 70% return. December of 21, 22% return. One thing that's really important to note, all of these price movements were news based on no actual earnings or based on numbers. The story and what was being said about the stock, things like contracts they were sure to get, and things of that nature drove the story for these price movements. But as a principle-driven investor, what I'm trying to get you to remember is story and price need to come together. They're not just independent of each other. In the short run, stocks are a voting machine. In the long run, they're a weighing machine. That is our fifth pillar of our principle-driven investors. Look at it with relationships. In a month, you might have a bad month with your spouse. You guys fight a lot. Does that mean your relationship's over? No. Just like if you have 1 month of absolute euphoria where you're like, I can't believe this is so amazing. Does that mean you're never going to fight again? No. What matters is the fundamentals. Are you guys able to get along? Do you guys like spending time with each other? When you do have problems, you talk them through. That's what matters. The same with investing. The fundamentals are what's going to drive that investment as long as you pay a reasonable price. As long as you and your spouse are able to sit there and have the same kind of beliefs as a couple, you'll be able to get through things. There'll be good times, there'll be bad times. Same with a stock. The hardest part about a stock is when you buy a stock, you're rarely ever, if ever, going to buy it at the bottom. You'll probably see it at a loss at some point. The question is, are you able to sit there and see that fundamentally the company is still the same and you can buy more shares? That's what makes investing difficult. Why is that difficult? Because you're alone in your house. You're alone at work. Other people out there are going to be talking in your ear because in recent time, everybody's making easy money with these companies. Oh my gosh, you bought Palantir. Oh my gosh, you bought Nvidia. It's easy money. And you're going to have FOMO. You're going to have fear of missing out. How can I be the only one missing this? Now, guys, I was just like that 28 years ago when I started in investing. I wasn't an investor. I was a hypester. I believed the story drove it. The two smart things I ever said I didn't realize that they were smart because I didn't say them for the right reasons. Yes, they happen to randomly be correct in the long run, which was that tech companies can generate a lot of profit a lot faster, and therefore they deserve a premium. But I didn't understand why that was. It was my justification for paying more for tech. And the other thing was, when I sat there and saw analysts, I'd always question, like, how do they come up with their numbers? How do they look at this and say, this makes sense? I didn't get that, and questioning that was very, very important in my process. And you're probably there at some point if you've made it this far in this video. Now, over time, I was able to meet other people. But guys, we now have the internet. We now have YouTube. We didn't have YouTube and my mindset changed. And my mindset continues to change, and it will continue to change. The process of which I invest will continue to change, and I love that about investing. But what's most important to me was making sure I have the right tools and the right people around me in order to make better investing decisions. And when I am confused, I can reach out to those people and get their input to see if I'm missing something. And that's why we created the community. That's why we have all these tools. But guys, we have thousands of people in this community, but we don't want scrappy people. We don't want people who are just out there to get fish thrown at them. We want people who want to learn how to fish, because we're all going to look at things differently. We're going to have similar beliefs, but we're going to approach different companies in different ways. What's most important to me is to get high quality people, and that's why we limit the number of daily spots to our community. We want to make sure that somebody who's ready to pull the trigger is the right person for our software, the right person for our community. So if you go to our website, everythingmoney.com/sign-up, you'll see we have limited spots. So sign up now. And the great news is, guys, I'm not asking you to make a permanent life decision. I'm asking you to dip your toe in. I'm asking you to make an informed decision. $7 for 7 days. It's $1 a day. We spend way more money buying the other simple things in life that don't make our life better. $1 a day to make your investing life better. And as somebody wrote to me today on Twitter, Paul, after learning your process, I slept better at night. That's all they could ask for. That's all you can ask for, because life is too short to be aggravated. Surround yourself with like-minded people. So go sign up, click the link in the description below, and it'll be the best investing decision you made all year. Thank you for your time.